Our top story of the day focuses on Step Finance and the $30 million hack causing the token to crash 90%. Let's start with the ugly side of DeFi. Step Finance, one of the more established Solana analytics and portfolio tracking platforms, just got absolutely wrecked. On the 1st of February, attackers compromised multiple treasury wallets and drained approximately 261,000 Solana. That's roughly $27 to $30 million at an average price of $105 per Solana. According to blockchain security trackers, the SOL was unstaked and moved after stake authorization got transferred to an unknown wallet. Step Finance confirmed the breach on X and said they're working with cybersecurity firms but haven't disclosed exactly how the attackers gained access, only calling it a well-known attack vector. The Step token, it crashed between 80 and 93% within hours. The team insists user funds weren't affected since Step focuses on analytics and not asset custody, but the damage to ecosystem confidence is done. So why does this matter? This hack couldn't have come at a worse time. It hit during APAC hours on the weekend when the broader market was already bleeding, amplifying panic selling across Solana. Step Finance wasn't just a dashboard either. They ran validator nodes, organised the annual Solana Crossroads conference, and owned Remora markets for tokenized equity trading. All of that is now in limbo. This incident adds to security concerns right when Solana is trying to attract institutional capital. DeFi security isn't just about auditing smart contracts anymore. Treasury management and operational security are also massive vulnerabilities. If you're holding tokens in projects with significant treasuries, pay close attention to how these funds are secured. Next up, we have a Ripple and the 1 billion XRP Unlock. Ripple just executed its February 2026 escrow unlock, releasing 1 billion XRP tokens worth approximately $1.63 billion. This is part of their standard monthly schedule that's been running since 2017. The unlock came from escrow accounts established back in 2022. Ripple split it into 4 transactions, 2 batches of 100 million and 2 batches of 400 million XRP. They've since relocked 700 million back into escrow, leaving a net 300 million XRP, around $500 million worth, available for treasury operations this month. Here's the problem though, XRP is already down 18% over the past 30 days, sitting at around $1.65. This unlock represents 1.66% of XRP's circulating supply, hitting at a time when the entire market is in freefall. So why does this matter? Well, historically, these monthly unlocks haven't moved price much because the market knows they're coming, but context matters. This time, the unlock coincided with a massive crypto outflow. $1.7 billion left crypto products in the past week alone. Spot XRP ETFs saw $93 million in redemptions. Grayscale insiders are actively selling their positions. The timing amplifies the psychological impact, even if the actual supply impact is limited. Ripple CTO David Schwartz even weighed in on price expectations, noting that if rational investors believed XRP had even a 10% chance of reaching $100, the token wouldn't be trading at these levels. That's a pretty sobering take from somebody who built the technology. The technical picture shows XRP below both its 50-day and 200-day moving averages, with the $1.50 level as the next major support. Bulls need to reclaim $2 to shift momentum. Next up, we have Ethereum crashing 20%, $300 million in liquidations, and Bitmain's $6.6 billion loss. Ethereum has had one of its worst weekends since the 2022 bear market, crashing from around $2,700 on Friday to an intraday low of $2,156. That's a 20% drop in roughly 48 hours. The carnage in derivatives was brutal, with over $306 million in Ethereum positions liquidated. But here's the bigger story. Bitmain Immersion Technologies, which pursued an aggressive Ethereum treasury strategy similarly to what MicroStrategy did with Bitcoin, is now sitting on over $6.6 billion in unrealized losses. They hold 4.24 million Ethereum, roughly 3.5% of circulating supply. At October's peak, that position was worth nearly $14 billion. It's now worth around $7. So why does this matter? This crash wasn't isolated. It was triggered by Trump nominating Kevin Warsh as the next Fed chair. Markets view Warsh as hawkish on monetary policy and risk assets dumped across the board. Gold and silver had historic crashes and crypto followed. The Fear and Greed Index dropped to 15, extreme fear territory. Ethereum's funding rates went negative, meaning traders are paying too short. Spot Ethereum ETFs saw $564 million in outflows in December alone. Technically, Ethereum needs to hold the $2,100 to $2,200 zone. A breakdown opens the door to $1,800. For any bullish reversal, Ethereum needs to reclaim $2,800. The silver lining, extreme fear readings have historically marked bottoms. The question is whether this is capitulation or just the start of something worse. Next up, Solana breaks $100 for the first time in 9 months. Solana just broke below $100 for the first time since April 2025. Sol dipped to around $98 before bouncing to the $102 to $105 range, but the damage is done. That's a 25% decline in the last month and 65% down from January 2025's all-time high. The liquidation cascade hit Sol hard, with over $95 million in Solana positions wiped out. The step finance hack just added fuel to this fire. Funding rates on Sol perpetuals went to negative 17% annualized, which is extreme bearishness. Trading volume has actually thinned as prices dropped. Open interest is falling as traders close long positions rather than a surge in new shorts attacking the price. So why does this matter? Here's the frustrating part for Solana bulls. The fundamentals are actually solid. January transaction counts hit record highs. On-chain fees grew 81% month on month. Solana also still has $15 billion in stablecoins on the network and $1 billion in tokenized real-world assets. The Alpenglow upgrade is targeting 150 millisecond finality and is on track for early 2026. But none of this matters when macro conditions turn risk off and liquidation cascades take over. Divergence between Solana's network usage and its token price is one of the most dramatic in crypto right now. Either the market is wrong about value or there are risks the on-chain data doesn't capture. For now, price action says wait for confirmation before catching a falling knife. And finally, Grayscale insiders are selling. XRP and Solana has been dumped amid the ETF outflows. This one flew under the radar, but it is significant. The SEC filings reveal that Digital Currency Group and DCG International, Grayscale's parent companies, are actively selling their positions in Grayscale XRP Trust and Grayscale Solana Staking Trust. On the 2nd of February, DCG sold 15,000 shares of the Solana ETF, worth about $115,000. DCG International sold 3,620 shares of the XRP ETF, worth around $115 too. Whilst it may not sound like a significant amount, these actually follow larger sales earlier in the week of 26,000 Grayscale Solana shares and 15,000 Grayscale XRP shares. When insiders at the largest crypto asset manager are reducing exposure to their own products during a drawdown, it tells you something about institutional confidence. So why does this matter? The timing aligns with brutal ETF outflows across the board. Spot XRP ETFs just recorded their largest single day outflow at nearly $93 million. The Grayscale Solana Staking ETF had 4 consecutive days of outflows, totaling $5.5 million. This creates a concerning feedback loop. Institutional selling triggers outflows. Outflows pressure price, and price drops triggering more selling. The smart money that drove the 2024-25 rally appears to be stepping back during the current stress test. For retail investors, this is a reminder that ETF flows cut both ways. The same institutional capital that pumped prices on the way up can accelerate declines on the way down. Watch the weekly flow data closely. Sustained outflows from spot altcoin ETFs would be a significant red flag for any near-term recovery thesis.